people ask me that, hey, whatever money you were earning before, are you currently earning the same amount of money? No.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. I'm so glad you're here with us again today. I've got another amazing guest, Sanjoy Dey. Sanjoy, welcome to the show.
Thank you, Jeremy. Thanks for having me here today.
Of course. Yeah, looking forward to our discussion. Sanjoy really transitioned from the corporate world to real estate, was primarily driven by a deep-seated desire to create wealth and foster financial freedom for himself and others. Sanjoy is a full-time real estate professional. He devotes 100% of his time to investing and empowering others to unlock the doors to financial independence. Sanjoy, I know that you've got a lot more in terms of kind of your track record, your journey, what you've been focused on personally and professionally. Maybe you can let our audience know a little bit more, about you and kind of your background and what you're focused on today.
Sure. I'd be happy to. So I am an electrical engineer. So I worked for about 16 years in corporate America as an electrical engineer. I was working in a Fortune 500 company. I was in different roles. I managed several teams, built teams. And then at some point of time, I thought that, okay, I always actually wanted to get out of the cubicles. I don't like it's not like I don't like my work, engineering work, but I don't like the predefined schedules, that, okay, I need to be there, from 8 to 7 or something. And in fact, the tech world is evolving. They actually require a lot more time from you. So that's why at that point of time, I actually thought that, okay, this is my time that I transition to real estate investment and real estate business. So at that point, I formed my company, Corfu Capital, back in June 2022. Since then, my company took part in acquiring 6 different properties across Texas and Arizona. We just closed another one in Dallas last month, November 2024. And I currently am focusing full time on my real estate related activities. And it's not, well, I'm saying real estate activities, not only the real estate syndication, because when I embarked on this journey, I found that people have some other need, let's say, they have need with their estate planning, and they have their need with the other alternate investments. So I also currently try to help them in few other possible ways. So that's kind of my background.
No, that's great. I appreciate you sharing that. And it's interesting because, I resonate with your story about being a recovery cube dweller. Okay. That's what I called my life back in the day when I first got started in the technology sales space. Is it was just a grind. For you, it was on the engineering side. For me, it was, picking up the phone, smiling and dialing and making 100, phone calls a day, in the 4 walls of a cube, right? So I can definitely resonate, with that story. And, the power of real estate also enabled me, to break out of that, dependence on the paycheck and really break free, from kind of the shackles of the 4, cube walls that I was surrounded with. So definitely appreciate, you unpacking that. Can you share a little bit more, on your kind of story of, transitioning from, an engineering role, which I would think that would be a fairly higher income level position into now, being really full time, in the real estate space, it kind of to me sounds like it was more of a you rip the band-aid off, and there was maybe a little bit or a lot of pain. Can you kind of unpack that a little bit more?
Absolutely. You are absolutely correct. And this is a question that I've been asked so many times. Like people ask me that, hey, whatever money you were earning before, are you currently earning the same amount of money? No. If I tell you that I'm earning the same amount of money, it should be a pure lie. No, I'm not earning that much of money right now. Okay, so but then obviously the question is, why did I transition? I mean, in the last one, full when why I fully transition. So the thing is, of course, like keep in mind that every person's situation is unique. Every person has a different unique situation. So in my case, let's say my wife is working full time. So of course, like one paycheck is coming to the home, and I know that. So that it's not like I am the only bread earner for the family. So that is one thing. And second thing is, of course, when I did quit, I did make sure that I have the runway to actually go for at least few months and for few years or something like that. I actually calculated that, okay, how much money I will need at least to survive, let's say for 2 years or something. Because here is the thing, whenever you actually speak with any entrepreneur, they will tell you that it's actually a hard decision, because when there you have two options. One option is you can be on W2 forever and do a side hustle and maybe do a part-time business type of thing. But there is a downside of that, because you are always actually altering your mind, right? Let's say I'm doing I'm engineering thing, and then I need to focus into my business. So I'm shifting my mind. That's very difficult many a times, because real estate also, or your business or any other business, let's say, they require you to focus onto some meetings, some phone calls, and whatever it is. So that's one thing. Another part is, let's say now if you quit your job and if you try to build your business, there's a funny thing. I have a Gujarati. Gujarat is a state in India. I'm not from India though. So I have an Indian friend, and he was telling me that in his community, his dad is a businessman, and his dad used to tell him that it takes 1,000 days to build a business. 1,000 days. 1,000 days meaning is 3 years. So his dad used to tell him that if you ever embark on a business, you have to keep in your mind that you will be hungry for about 3 years. You may not get any money in 3 years. And I actually spoke to so many people, and most of the people told me the same thing, that in the first 3 years, don't expect to earn a lot of money. In the first 3 years, it's like you are you want to climb a ladder, and the ladder is leaning on a wall, and you are building that wall to lean against. Currently, you are, I tell myself that I'm building that wall so that one day I can put the ladder against the wall, and I can actually, climb the ladder. So of course, to go back, sorry, I told many things, but to go back to your question, currently, of course, I'm not making the same amount of money what I used to make, but that's okay, because I had some backup plans, and I'm slowly moving towards actually replacing, or going almost to the same level where I used to be.
Yeah, Sanjoy, your story is incredibly powerful. It's also very encouraging, right? There's a lot of people out there today that are probably going to be forever connected to the W two, right? Because they lack either focus, clarity, or they lack being willing to be confident in themselves and take a risk, right? And that's what you've done. You've taken a risk, right? You've bet on yourself, right? And that this journey that you're on now is putting one brick on top of another, right? Brick by brick. You're building up your, business in the entrepreneurial space so that someday you can start climbing up that ladder. But the difference is is you're doing these activities to fulfill your future dreams and not the future dreams of your employer. Does that make sense?
Exactly, exactly. And let me tell you one more story of myself. Why I'm taking the risk and why I am running towards my dream. I have a very specific dream. I've been to 71 countries, and I am actually a traveler. I'm an avid traveler. I love to travel. I've been to, I mean, because I love to see people. I love to be in different countries, different communities. I feel like that's the biggest treasure of my life. My treasure is not how much money I have in my bank. When I look back, when I see my memories, that's the biggest treasure I count. Actually, that okay, that's what I have in my actual memory bank, not the actual treasury bank or something like that. That's one thing. And second thing is I'm also a writer. I write travelogues. So far, I wrote 8 books in my own language. So that is what I am actually dream for. That okay, if I get some time freedom and if I get obviously some financial freedom as well, then I can do more of those stuff. What is my real dream?
Yeah. So it's not necessarily that you're in pursuit of, financial independence or financial freedom. What you're really in pursuit of is time freedom, right? The ability for you to spend time on things that you're passionate and interested about, which based upon what you just told me is largely, having opportunities to experience new things, new places, right? New people, those types of things. So I really appreciate your perspective. I would like to maybe pivot now to talk a little bit more about, Corfu Capital and your, real estate business, and would love for you to maybe kind of share some of those early lessons, that you learned when building your personal real estate portfolio.
Sure, sure. So, as I told previously, look, I mean, well, I actually started my real estate journey, I mean, almost like 10 years back with single family homes. And with single family rental homes, as you know, that you need to obviously spend time to actually manage your tenants, but you actually hit some scalability problems. I mean, you cannot scale up. When you scale up, I mean, a lot of things actually fall upon your head. And then a few years back, I actually came across this real estate syndication world. I kind of a friend of mine introduced me to this business world. I enrolled myself to an academy. I started going to several, conferences until I got comfortable. And then I invested passively myself to get a feeling about the whole business model or something like that. And then I started my own business, which was back in June 2022. So that was the time actually I started it. I mean, and of course we actually acquired a first property in San Antonio, Texas. Second one was in Tucson, and the other 4 properties are in Dallas. So that's how actually I, built the whole the business since then. And currently our focus is, acquiring more properties in the Sunbelt region of Texas or in North Carolina, or who knows, maybe in some, but in the future, maybe in Florida also.
Yeah, no, I appreciate you kind of your reminder of the importance of investing in yourself. I think that there's not enough credibility that's given to that, type of a strategy, and it's really not something that you set it and forget it. It's really largely something that you invest and continue to reinvest in yourself, daily, monthly, quarterly, et cetera.
I'm Zach Happenstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
I'd be curious to kind of know a little bit more about maybe what types of personal asset classes or I know you mentioned, the locations or the markets that you generally like to focus on, but is there any particular asset classes, business plans that you typically tend to navigate, towards when investing passively?
Of course. So, see, like when I started my journey, I was mostly focused into the Class C properties. So the Class C properties have a specific characteristics. Like Class C gives you a lot of challenges at the beginning. You may not get a great cash flow, but if you actually fulfill your business plan, if you can run your business plan properly, and then when you sell it, then it gives you good amount of return. But one thing I realized that most of the first time investors, they don't actually understand that model and they don't like that no cash flow type of thing. They think that something got wrong. So it's kind of a challenge to kind of tackle that kind of scenario because you are firefighting with your actual business where the investors are not quite happy. So that's why later on my journey, I actually moved my focus to Class B. So Class B properties have, lesser challenge and they have better cash flow outflow, I would say. And those are actually, with investor perspective, those are easier properties to deal with, I would say. So that's why currently we are only focusing and acquiring, let's say, Class B properties. So yeah, I mean, I guess that's pretty much about it.
Yeah, no, I appreciate that, kind of letting us know what your typical, buy box is. It's also very similar to my own, and the fact that I like the B class, neighborhood, B class apartment space as well. It's really, your traditional workforce housing, demographic, typically safe, affordable neighborhoods. And it's really where, the majority of the population, lives today. And I agree with you. I like investments that pay immediate cash flow day one. Most of the investments that I've personally made, have been in existing, properties that have, some element of a value add associated with them. But if no value add is provided, they still continue to produce, regular, consistent, distributions, to investors, and those distributions, of course, are heavily tax advantaged, through the power of depreciation. And I like the value add space myself as well because usually there's an equity upside, at the end, when that project or property goes full cycle. So appreciate you sharing. I know that you're someone that's invested in over 1,500 units in multifamily investments, and I know that you also don't have a crystal ball, nor do I. But what trends or shifts are you, currently observing, in the market over the last couple of years, and what do you expect into the future?
Sure. So first of all, like when I actually entered into the business back in 2022, I would say that that was a difficult time. None of us knew that it was a difficult time. None of us, because none of us have the crystal ball, as you said. Because Fed didn't disclose that they are gonna increase or double the interest rate in only 14 months. So even the great economist of this country couldn't forecast that, right? So that increased the debt expense, of course, for all the businesses. That created a tremendous pressure on the business plans. And because of the low liquidity in the mortgage or lending market, everything went down, right? The property values also pulled back a little bit. And another thing happened, which many people do not know, especially in the multifamily sector, like almost pretty much the entire United States market actually got a greater number of new constructions, which probably was one of the highest numbers in the last 30 years. That also happened because these construction companies, they got the loans for a very cheap price during the COVID time, and those started hitting the market, the new supplies in from 2022 to till even the first half of 2025. So that actually created a less, or that kind of slowed the rental growth. Now that was the challenges. Those were the challenges for the last 3 years, I would say. Not 3 years, yeah. Beginning from 2022 until today. But now going forward, what would be the scenario? Going forward, we'll see a very unique scenario because now almost, Fed has started dropping the rates since September. So, and we are hoping that the liquidity will come back to the lending market, and more liquidity meaning is translates to more buyers, because buyers will be getting higher loan to value ratio, ratio when they go for a new loan, right? That will encourage them to buy more. Obviously, I can give you an example, like when in back in March 2022, we used to get a 80%, even around 80% loan to value. That now is almost 65%. So people need more money to buy this kind of businesses, and that's putting a tremendous pressure. Second thing is like the those tremendous amount of new constructions, right? Those are almost getting absorbed. So from after the first quarter of 2025, in the market there will be almost no new supplies. So that will drive the rent growth again. I mean, because as I said, since 2022, mid 2022, we didn't get that much of rent growth, but that will come back from mid 2025. So so few things will happen at the same time. One thing is your mortgage market will start becoming more flexible, more relaxed. Second thing is less supply of new construction, and of course, like if we see that if the interest rate goes down, that will create less pressure on people's wallet, so they will be more willing to pay more rent. So all these positive things we'll see very soon in the, especially probably in the second half 25, and then of course it will be getting to the peak in 26 or 27. So those are the things which are kind of coming. So we just have to be patient and work on our business plan.
Yeah, no, that's great. And I really appreciate your perspective. And you're exactly right, in terms of your analysis on what, the increase in interest rates has done, in the business, the new supply that has come online over the past couple of years, and, where that absorption is relative to the new supply, coming on the market within the next couple of years from now, right? We also can throw in there maybe a couple of additional ones, and of course, market dependent. We've seen property taxes skyrocket in some areas of the country. Certainly, we've seen insurance costs, skyrocket in some parts of the country. So there's been a lot of headwinds with operators, over the course of the last, few years. And it's going to be interesting to see, what plays out in the course of the next, 2, 3, 4, 5 years. I'm very optimistic and very bullish about the investments that I personally made in 23, 24, and now as we move into 25. But truth be told, the investments that I made in 21 and 22 aren't necessarily performing, according to pro forma, right? And that obviously is a direct result of the fact that people didn't expect property taxes, insurance costs, cost of debt, interest rates, right? To really skyrocket new supply, in the way that they did, right? And so it really comes down to being a prudent investor. I'm a big supporter of dollar cost averaging, right? I make investments at the peak of the market. I make investments, when we're in a down market, right? The truth is that we don't know always where we're at in the economic cycle. We can certainly make our best guess predictions, but I never forget talking to people back in 2016, 17, and 18. Everybody was screaming a recession's coming. Well, if you sat on the sidelines in 2016, 17, and 18, at least as it relates to real estate, you missed out on a bull run, right, in that space. So again, even the experts, even the top economists, get these things wrong all the time, which is why my advice for folks is certainly, to diversify and really identify those best in class operators in the space that are truly able to execute, on that business plan, even in the potential of having, some of these economic headwinds, facing them over the course of that business plan. My next question for you, Sanjoy, is really, I'd like to talk specifically about maybe that new investor. What advice would you give to engineers or other, professionals looking to make the leap into real estate investing?
So first of all, for real estate investment, right? I mean, when I speak to my prospective investors or my former colleagues or not former friends, I found that 90% of them actually do not know actually how to invest into the real estate field. Most of them actually are still investing into the stock market. And as you said, I always tell them that, hey, there is nothing wrong with the stock market. It's not like a black and white thing. And I'll not be the person to blame the stocks or something like that, or put a wrong name on the stock market. You can obviously make a lot of money also from the stock market, but it's always advisable to actually diversify so that you are not putting all your eggs on the same basket. But for real estate, what I tell people that, hey, do not actually get carried away by the headlines that you read on CNBC News or anywhere else, and also do not be biased with your memory of the 2008 market crash, because I found that many people are still highly biased by that crash memory. They still think that, oh, something like that will again happen, and then everything will bust. So I tell them that, hey, you actually need to know first why that crash happened, and what are the measures the United States government did put after that crisis of 2008 so that it doesn't happen again. Second thing is, I try to educate them that, okay, what is the business model, how the real estate investment works, what are the typical investment returns that they can get, and of course, what are the risks. When I talk to anyone, I tell them that, hey, you know what, before making money, you have to keep in your mind that you don't want to lose your money. So please ask me what are the steps I'm taking in my business plan to actually safeguard the project. Okay, please do not focus first on the profits, but put more focus on the risk management mechanisms. So I try to educate them, and I tell them that, hey, you know what, if I would be you, I would be asking this question, this difficult question, uncomfortable question. I actually even try to educate them with these scoops. So yeah, that's what I do actually.
Yeah, Sanjoy, that's such prudent advice, and I appreciate you, sharing that with our listening audience. What would be maybe one or two different ways that our listeners can connect with you to learn more about what you're up to?
Yeah, sure. So they can actually go to my website, www.corfu-capital.com, and there is a link to set up a call with me. And they can also, my phone number is also there. They can just give me a call anytime, and I would be happy to have a chat. It's not like they have to invest with me or anything like that. I always tell people that, hey, I'm like open box. Please give me a call. I'll be able to. I'm not able to. I would love to give you some suggestions or knowledge. Whatever I know, I will be happy to share with you. So that even if you get a small information, that should be, I'd be happy to. I can give it to you.
Yeah, Sanjoy, you have a servant's heart. I really appreciate your time that you spent with us today on the episode.
Thank you, Jeremy.
Absolutely, and listening audience, thank you again for jumping into another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.